Hi, I'm Jim Jubak, and welcome to my YouTube video for Wednesday, April 5th. Before we get to the stock market, I'm just so excited I could bust because today I am going to my first Major League Baseball game of the year. It's a day game at Yankee Stadium, Yankees, Phillies. Day games are the best part of baseball as far as I'm concerned. It starts at 1:05, sit in the bleachers for $10 and catch some rays as well as maybe some sun, we'll hope, just a little bit. I will be torn because, hey, the Yankees are my home team, but I spent my high school years rooting for the Phillies and got to live through the great epic Phillies collapse of the 60s when manager Gene Malk demonstrated forever the problem with throwing good pitchers after bad. So anyway, on to, if you like this video, please give it a thumbs up, whether you like the Yankees or the Phillies. Subscribe to my YouTube channel. That way you get notification when we do our next one. We do about 3 a week. If you want more of me, you can go to my free site. That's jubakpicks.com. And that's got 3 portfolios. If you want 6 portfolios, including some options and ETFs, you can go to my paid site. That's jubakam.com. And links to all those down below. And let's move on to the stock market. Okay, today's topic, the problem with Goldilocks. Okay, this is a Goldilocks market, which means that it's sort of, the porridge is not too cold, it's not too hot, it's just right. So the assumptions here are there will be no recession. Interest rates will stabilize after a May hike and no more increases, and then they'll start to go down as the Fed cuts rates, and we'll get falling inflation. All those 3 things are core to Goldilocks, and what's interesting to me is if we look at Goldilocks, the market has basically been stuck. This is the S&P from December through now, and you see there's movement, but the range is pretty much right in here. There's this really sort of negative thing that happens here. And interest rates are sending negative messages. But the problem with Goldilocks, as far as I'm concerned, is that it's really a recipe that I think in the current environment doesn't so much pop stocks higher, it keeps them where they are. So that's not a whole lot of risk reward benefit. And the other thing, and this is more problematic, is that it really depends on all 3 of these things happening together. And I don't see any way in which they're not contradictory. So we're saying we're going to get falling inflation, but no recession. It would be very unusual. The economy would have to slow a little bit more, but not enough to drive us into negative. And inflation would have to come down a little faster than it is. And I don't see how we get to lower inflation without getting something very much like a recession. And then, of course, unless we get one of these 2 things happening, we don't get lower interest rates from the Fed. We indeed get the Fed perhaps pausing and then waiting to see, data dependent on whether inflation does indeed come down very quickly. We got a big no vote from OPEC plus on that on Sunday, where they cut oil production for the rest of the year. That doesn't immediately show up in the inflation numbers that the Fed watches, which are core, which exclude energy and food. But eventually energy prices go into everything else. They cut profit margins for companies that have to pay for energy. And right now we're looking at a couple of quarters with a pretty clear negative trend in earnings growth. So not earnings growth, but earnings diminution. So all these things make me say Goldilocks is, well, if not about to be eaten by the bears, certainly not looking terribly robust, and I wouldn't sell an insurance policy right now. Okay, thanks for watching. It's been Jim Jubak. If you like this video, please give it a thumbs up. If you want more videos, all free, subscribe to my YouTube channel, which is also free. We're doing about 3 a week. Again, free. My free site is free. It's jubakpicks.com, 3 portfolios, or my paid site, which has 6 portfolios, including some ETFs and options, which I think options especially are particularly well suited to this market. And that's at jubakam.com. You can find links to all that stuff down below. Thanks very much for watching.